The purpose of the insurance is really to transfer your financial risk. And that's exactly why it is very important that we sit down together and I give you the proper advice. Way in the right way. So it's very important you sit down and we see a lot of issue comes forth. I've seen a lot of a lot of people that come in that's had sometimes sicknesses like cancers, and it's just, HIV. I've seen some customers that have serious issues and I have to sit down and the person who has a cancer, I'm not gonna work the same the person who is very, very healthy because, those things comes into consideration, what you had. Now, nobody knows the future.
Wherever you are watching us from, welcome to this new edition of your program from the United States of America, where we will be connecting with the whole world. We are here today in the great state of Texas, and we are going to talk in detail about health insurance, as well as discuss the important topic of taxes. To help us with this conversation, we have the great honor and privilege of being hosted by Shawn Shrestha at his wonderful company. Shawn Shrestha, we would like to say a very good morning to you.
Good morning. Hi, everybody, and welcome.
We are very happy to come to your agency to talk about everything concerning insurance. What do we need to understand about it? And the big question, American legislation has changed many things. Shawn, how are you doing?
Doing really very good. Thank you. I appreciate it.
How about your company, your insurance company?
Oh, we are doing very good. We're growing. And thank God for all my clients that trust pay with the service. And thank you for bringing this message out there for people to hear.
If people are able to come here in person, could you tell us, just to be clear, what would be the very best location for them to find you? Where should they go exactly?
So you can reach me directly there. You can do walk-ins. My address is 3109 North Beltline Road, Suite 118, Irving, Texas, 75062. You can also call and text my office numbers 214-609-2889, and you can also visit me online at www.shresthainsurance.com, and the link will be in the description of this video.
We are here at Shrestha Insurance, where we're going to talk. Shawn, I'm going to start with the first question. The first question, rules, ACA, and obligations. My first question, what do we understand by ACA, and what are the main objectives? So I can also add to this question, two questions. What is the difference between a minimal MEC coverage and a coverage offering a minimal MV? I'll ask you those two first questions.
Okay. So what is the Affordable Care Act and what's its purpose? So basically, the Affordable Care Act was designed for people who cannot get insurance on their own. If they are, let's say, maybe working for themselves and they're self-insured, or they have family members that they cannot get the insurance from work because it's maybe free for the employee, but as soon as they add the family, it just skyrockets. It's really high. So when it becomes unaffordable for them, that's the name, Affordable Care Act, so that people can purchase an insurance at very low cost. Sometimes you can get it for zero cost. So that's the purpose of it, is to have it available for anybody and everybody that is a U.S. citizen or are here legally as a green card holder and people who work here legally. So to help assist with their health insurance, that's what its purpose is for. And then you have the question is, what is the difference between the MEC and the minimum value? So see, minimum essential coverage is basically what it falls under an Affordable Care Act. So there are some coverages that you can buy from your work. So it's not fully blown coverages like, your major medical, like you see it in an Affordable Care Act. But however, right, if in order for it to be approved for an MEC, it's essential coverage that you have to have, things like your emergency visit, doctor visits, your lab. and your hospitalizations and stuff like that. So as long as you have something like that minimum required by the government, it falls into minimum essential coverage. However, the minimum value means it does not fall under your Affordable Care Act. So there are companies out there, maybe have like maybe 2 or 3 employees, or you are self-employed and you don't really, let's say you don't need a pregnancy coverage, you don't need certain covers and you're healthy, then you can purchase that. Do not fall under ACA requirement. However, you can purchase, this is also known as an indemnity plan, which is like a fixed benefit plan. So you can go out there and purchase things like that. Now there's a market for everybody. Like a man like me, I'll never get pregnant. I mean, I can look pregnant, but I'll never get pregnant, right? So maybe I don't need a pregnancy coverage. So there are things like that out there. You can purchase a coverage call under a minimum value.
Shawn, thank you for the explanation for those 2 questions. We will finish this first part with why is it always important to have health insurance even without a federal penalty. Question 3. And now I have question number 4 for you. What are the possible risks or potential consequences that could arise if a client happens to provide an incorrect or inaccurate estimated income to the marketplace?
Okay, all right. So you got to understand, what is the insurance for? I mean, the insurance is there for you to protect your assets, protect your health, because I heard this term called, insurance, it's a scam. Well, it's only a scam if you don't need it. So when you need it, then you are in the United States. Things are expensive. In order to do a small surgery, it could cost you anywhere from $10,000 to $15,000 and up. Things are expensive. So the penalty is very minimal that the government imposed. It was like $1,600. But think about it. $1,600 is nothing, really nothing. But if something happens and you need to do surgery, you're going to pay way more than $1,600, even if you were to pay cash. So it's important that you have health insurance, regardless of whether the penalty is there or not. Luckily, the penalty is waived now. But, I believe that, like we talked about, the minimum essential coverage, at minimum, have some of them. Maybe just go, if it's major medical, it's too much and you're young, have some type of indemnity plan where it covers some type of accidents or hospitalizations, and you use it. When you need it in those types of events, so that you don't have to worry about, emptying your bank account, $20,000 or $30,000. You go to an emergency room, it's an average of $10,000 for anything. So stuff like that, make sure that, you protect yourself from things like that. Now, considering what is the risk, what happens if you give an incorrect income? Now, there's 2 things to it. Now, you never know how much money you're going to make. There's no guarantee that you will get a job and keep the job for the whole entire 12 months. That's why they call it an estimate. So I suggest that you give the best estimate that you possibly can. So the only thing the IRS or the marketplace can do is impose the difference. So the difference is usually like for every $1,000, you're going to pay $10. So that's not exactly how it is, but that's good rule of thumb after certain level. So let's say you're at, you make $18,000, you were a single man and you want a silver plan, right? So you can probably get it at a very low cost. But what happens if you exceed $18,000? So after $18,000, for every $1,000 you exceed, you're going to give back, return the premium tax credit that you have received. For every $1,000, you're going to return $10. So about a good rule of thumb. So if you do it incorrectly, so there is a risk of having to return that difference. $10 for every $1,000 you make over the limit that government says. So that's basically the risk, is you give them money back. The government also will give you the money back if you make less. So you got also put that in a consideration. What if you make less? What if you make less? This is the same way they're going to charge you money, extra money. They will also return the money if you overpay. And it's happened a lot.
Wherever you're following us from, We're connecting Texas in the United States of America to the whole world here at the Shrestha Insurance Agency. We're hosting Shawn Shrestha for you, who is the general manager. We're going to watch a segment on taxes and tax returns in the United States of America. How is it done? What are the key points for the filings? Then we'll give you an update.
In the United States, spring isn't just about flowers, but mostly about numbers. For millions of Americans and residents, it's tax season, an annual ritual where precision is essential. Unlike many countries where tax is withheld at the source in a simplified way, the American system relies on self-reporting, a progressive system where rates vary from 10% to 37% depending on your income. It all starts with gathering the documents. The employer provides the W-2, while independent workers receive the 1099. These documents are the basis of your filing with the IRS, the Internal Revenue Service, the Federal Tax Collection Agency. The major goal: reducing your taxable income. The IRS offers two paths: the standard deduction, a simple fixed amount, or itemized deductions, medical expenses, mortgage interest, or charitable donations. Every receipt can tip the scales. Once income and deductions are entered, the verdict comes: the tax return. If you overpaid during the year, the state sends you a refund check. Otherwise, you must settle the bill before the deadline, generally set for April 15th. To complete this task, 3 options are available to taxpayers: filling out forms manually for the bravest using approved software, or hiring a CPA, a certified public accountant, essential for complex cases. Be careful, however, the IRS does not joke about accuracy. An omission, even unintentional, can trigger an audit or heavy financial penalties. The key to success? Rigorous organization of supporting documents throughout the year. Filing taxes in the United States is a complex act of citizenship, but mastering the inner workings of the IRS is the best way to protect your wallet. From Dallas for Wanjila Connect.
Back on our set live in the United States of America, in the state of Texas, in Dallas, we welcome Shawn Shrestha, who is the General Director or General Manager of the Shawn Shrestha Insurance Agency. Shawn Shrestha, we are going to talk about taxation IRS claims. We are going to talk about taxation IRS filing. My first question, question 5, what are premium tax credits? What do we understand by the premium tax credit, PTC? And I'll add a second question. Why might a client have to repay aid received for their health insurance? I'll add that with question 6.
Okay, so what is a premium tax credit? And why might the client have to repay part of their health insurance subsidy? So it's basically just really going back to the question from earlier. What's going to happen if you incorrectly report your annual income? So the premium tax credit, the meaning is in the name itself. Premium, meaning what you pay every month for the insurance, and credit, where a part of the premium will be given back to you from your taxes. So whenever you make money, what do you pay when you make money? You pay taxes in a federal tax. So basically, what happens is if you fall into a certain federal poverty level, starting anywhere from 150% all the way to 400, 500%, for every grid of this federal poverty level, they will provide you with a tax credit from your taxes, which you can use to help pay towards your health insurance premium. So think of it as kind of like a coupon that you get. So for an example that I said, for somebody who makes $18,000 a year would get the maximum tax credit. So basically, in that sense, let's say the insurance is about $300. That's the premium. And somebody who is making only $18,000 a year probably could receive up to like $300, $400 a month. So basically, you got it's for the lack of a better word, a coupon for that amount of money. And when you go to the marketplace and say, hey, look, I got this much money, what can I buy? So let's say if your premium tax credit, the credit that government gives you, or the coupon amount is more than the premium itself, then at that point in time, you do not pay any premium. So that's what the purpose of the premium tax credit is, to pay towards your premium. So if the premium tax credit is less than the premium, then you will pay the difference. So that's what it's designed for, is the credit that government gives you to pay towards your premium. But it cannot be applied to any insurance. It has to be applied towards the insurance that you purchase through the marketplace. Okay, it has to be available through marketplace. So that's the reason why you have to go to the marketplace and purchase the insurance from there and then use that towards it. So to answer your second question, why might the client have to repay part of the health insurance subsidy? Well, I think I basically pretty much covered it, is because your premium tax credit maybe is not as much compared to what you did receive. So if you received more premium tax credit, but you really only supposed to receive a certain amount, which is less than what you received, then that is the portion you're going to pay back. And when do you know and how do you know? When you file the tax. When you do your tax, you're going to see, oh, actually, I made $44,325.33. Now, based on this amount, this is the money I should have gotten. Well, I got a little bit more. Well, pay that back. Now, there is no percentage or interest or anything. The government charge on top of that. A lot of people, you've got to be very clear on this. Okay, some people, oh, I was charged, I'm penalized for having an insurance, and the government took $1,900 more. Well, the government didn't penalize it. It's just the subsidy you should have received based on your income, which you didn't know how much you were going to make, so they just took it back. There's no interest charged on that money, and there's no penalty. It's just the adjustment they do at the end of the year, and it's called the excess premium tax credit that they receive.
Wherever you're watching from, we're connected with locations all around the world, from Dallas, Texas, in the United States of America, where we're hosting Shawn Shrestha, the general manager of the Shrestha Insurance Agency. We're moving forward with this program. We're going to watch this segment on taxes and how they're handled here in the United States. This is the second segment.
While the American tax system is one of the most rigorous in the world, it's also one of the most feared. Every year, millions of taxpayers lose money simply because they don't know the rules. The first trap, administrative errors. A mistyped social security number or a basic math error are the main reasons the IRS rejects filings. The solution, electronic filing, which reduces the error rate from 20% to less than 1%. But beyond the form, there's the substance. The IRS offers savings opportunities that are often overlooked. The child tax credit for parents or the earned income tax credit for low incomes can mean thousands of dollars in direct credits. The expert's tip, reducing taxable income through retirement savings. By contributing to a 401k or an IRA, you're not just planning for your future, you're instantly lowering today's tax bill. When should you hand things over to a professional? If you own real estate, complex stocks, or are self-employed, hiring a CPA often pays for itself through the tax savings they'll find for you. For entrepreneurs, the golden rule is documentation. Every mile driven for work, every dollar spent on office supplies is a potential deduction. Without proof, the IRS will always win in an audit. The ultimate advice? Patience and record keeping. The IRS can go back 3 years for a standard audit, and much further if fraud is suspected. Keeping your evidence is your best insurance. Navigating the waters of U.S. taxation requires a methodical approach. By planning your filing ahead of time, you turn a stressful chore into sound financial management. From Dallas, for Wanjila Connect.
Back in the studio, live from the United States of America, in the state of Texas, in Dallas, we are hosting Shawn Shrestha, who is the General Director or General Manager of the Shrestha Insurance Agency. Shawn Shrestha, We're moving on to point 3, where we'll talk a bit about employer coverage. So the first question we want to address, we're putting together a panel of questions here. What is the employer mandate rule? How do you know if insurance is affordable for an employee? An employee? Question 10. And I'll finish with this question. What is the difference between a group plan or an ICHRA?
So let's go with what is the employer mandate under ACA? So it really depends on the employer. If you're working for a company that is, may have like 2 or 3 employees, they don't really have to provide the insurance. So that means the insurance that they provide don't have to be ACA compliant. But if you work for big companies like Amazon or Walmart, something real big corporation, they have to have an insurance that falls under an ACA. Okay, so really the mandate is like the group of the number of how many people they have. If that certain number falls under it, they don't have to do an ACA compliant, but if it exceeds, they get penalized for not giving insurance, and it's a daily penalty. Trust me, it's way more expensive than, paying for the insurance. So yeah, it really depends on the company, like our size of the company. What do you have? They have both the ACA compliant and then the MEC kind that we talked about earlier, MEC, and then the minimum value. We're kind of like a supplement insurance, a kind of like a sort of like an AFLAC insurance that, some type of accident or a critical illness coverage. So there's all sorts of coverages and options that's available out there. So it's how do you determine if the health coverage is affordable for the employee? So they have a percentage. And I believe for 2026, it's 9.65% of your income. So if you are someone who is self-only, and if your health insurance premium actually exceeds the 9.65% of your income, that is something important to note. Then it's considered unaffordable. So at that point in time, you are allowed to go and purchase an insurance from an ACA. And obviously, if you're, for the whole entire family, usually if it's a half your paycheck, then of course it's unaffordable at that point in time. But for a self-only policy, if the premium exceeds 8.965% of your annual income, it's considered unaffordable and you can purchase the insurance. But if the premium is less than that, then it's suggested that you remain with your group. Sometimes a group insurance has a little bit of a good perk. And for your last question on this, the difference between group and ICHRA. Now, ICHRA is for your kind of sort of a group insurance that we use a marketplace for. And remember, all of the group insurance that you get from work, those plans that are often provided by your employer, they don't necessarily mean that you are purchasing a marketplace insurance plan. But the ICHRA, you can purchase in a group fashion. You can purchase that. So basically, a marketplace insurance, you can use it towards your group. And then you get subsidy based on your, insurance for employees' income. In a group, there is no subsidy. Remember that premium tax credit we talked about earlier? There is no subsidy on that. You have to pay the full price. So why do some people choose, or group insurance choose the ICHRA, is because, they're a small enough company and they cannot really afford it on a self-premium. So they are like, hey, we can go through that and maybe we can get some benefit or assistance through the market tax credit and purchase a group insurance through Marketplace.
Wherever you are watching us from, we are connected with locations all across the world, from Texas, in Dallas, in the United States of America, where we welcome for you Shawn Shrestha, who is the general manager of the Shrestha Insurance Agency. We are going to follow this segment on how the IRS is organized and how it does its work, to be able to channel everything related to taxes and insurance to be in compliance in the United States of America.
Behind the dreaded acronym of the IRS lies the most powerful financial administration in the world. But how is this institution actually structured to channel billions of dollars in taxes and insurance? In 2026, the IRS completed its transformation. Led for the first time by a chief executive officer who also oversees the Social Security Administration, the agency is divided into 4 major units: individuals, large businesses, small businesses, and government entities. It starts with your very first paycheck. The IRS doesn't just collect income tax. It also manages FICA, the tax that funds your retirement and your health coverage. Medicare ensures the sustainability of the American social model. To process over 160 million returns, the agency now relies on Digital First, an AI-powered infrastructure that instantly cross-references your reported income with information sent by your banks and employers. The system is based on a unique concept: voluntary compliance. The state trusts you to tell the truth, but the IRS keeps a close watch through its powerful criminal investigation service to root out tax evasion and document fraud. Being legal in the USA means respecting 3 pillars: reporting all of your worldwide income, paying your taxes on time, and keeping your records. The IRS isn't just a collector, it's an arbiter that ensures everyone contributes their fair share. To help the citizen, the agency has simplified its tools. Online services now allow you to track your payments in real time and correct errors before they turn into penalties. Technology at the service of transparency. Understanding the IRS means understanding America's financial engine. A complex machine, but essential to the country's legal and social order. From Dallas for Wanjila Connect.
Back on our set, live in the United States of America in the state of Texas in Dallas, we are hosting for you Shawn Shrestha, who is the General Director or the General Manager of the insurance agency, Shrestha Insurance Agency. Shawn, we are going to move on to compliance and risk. Conformity and risk. Big question 4. I took question 14 and 50.
Yeah.
Yes. Shawn, what is the impact of an incorrectly reported income on ACA subsidies? And above all, how to avoid an audit or a problem with the IRS.
So what is the health coverage exemption? I mean, question is, what do you really need it for without, I don't believe that it's really something that, in a sense of health coverage, like if you have a group and you have a certain amount, you don't have like a whole lot of group. So that is an exemption. That is a waiver that you do not have to provide the health coverage for it. And also in health coverage used to be in the past, if you didn't make, if you're under your 150% FPL, that you are exempted out of purchasing health insurance, which since the penalty is taken out, that exemption rule kind of gone out the window too. So there really isn't a rule, anything ready for that. It only will have an effect if you have a group of certain less than 50 or so, then you are exempted, or meaning you're waived. And another exemption that they used to have during the year when they imposed the penalty is if you purchased a health share insurance plan, which in many cases is actually sometimes about a third of the cost of the actual insurance premium. Meaning, let's say you are a self-employed and your income exceeds the FPL, meaning you're not qualified for the premium tax credit. So if you don't qualify for the premium tax credit, the cost of insurance is very, very high. Average silver plan right now is around $500 to $800. Imagine paying that every month. And the out-of-pocket for that is like $9,000. So you're like, let's do the math for $500. That's $6,000 per person at $500. And the $9,000 out of pocket. So $6,000, $9,000, that's almost $15,000 before they cover anything. So you see how it can become very unrealistic and unaffordable for somebody healthy. And they felt like, I'm being penalized for making money. So I don't want to buy this, but that's why there were penalties. A lot of people were paying the penalty back in the day. But as long as you bought a MEC plan, or some type of health share plan, the penalty was not imposed. But like I said, since they removed the penalty, there really isn't any talk about the exemption. It's not that it doesn't exist, there's just no need for it, you know. So are you ready for the next question or are you, okay, me too.
Me too.
So, I mean, your question basically asks what should be done if there is an error in a marketplace enrollment. I mean, what type of error are we talking about? An error because you gave the wrong income?
Mm-hmm.
Then, like I said earlier, whenever you file your taxes, the income will be corrected. And if you owe money back from the premium tax credit, you're going to pay that money back. But if they owe money to you because you didn't make enough money, then they'll pay you back. And then other errors, like it happens a lot, spelling of the name, because we do work with a lot of immigrants. And the name is never heard of, right? I mean, I'm pretty sure, you know, in your group of people, you know, the name is, to Americans, it's unique. Now, if you go back to, you know, wherever you're from or wherever I'm from, those names are common. So you hear it and you know exactly how to spell it.
Mm-hmm. Yeah.
So, you know, when that happens, and another big error that I often see, especially here on the application, is because in our passports, it's the month first, right? Over here, the month comes first and then the date. It's kind of reversed. The date is first and then the month in a lot of countries. So instead of the United States, so whenever you're giving your date of birth, don't say something like 11/4/2025, because maybe you're thinking it's the people over here think that it's November 4th, but actually you meant in reality something else.
Mm-hmm. Yeah, I see.
April 11th. So make sure whenever you're giving the date of birth, instead of saying 11/4, just say November 4th or say April 11th, so they will correct it, you know. The system will correct it. So that is one thing I see a lot. Another error a very common mistake that I see is the street address over here, especially when you come from a different country. The address is, they don't understand it, you know, where the street name and the street number goes, where the zip code goes. So sometimes they're giving the zip code for the street number and the street number for the zip code, you know, or the street number for the apartment number. And, you know, every time I ask, like, what's your address? And they give the city first, Fort Worth, Texas, and then this side. So it could get confusing, so make sure you double check. So just give them your driver's license if you had it. Instead of trying to explain what it is, make sure you have your ID card with you. And it's all written in there easily, so there will not be any mistakes. So whenever you're doing the enrollment, make sure you take your ID card with you. But if an error happened, trust me, it happens all the time. We're human. I've made many mistakes myself in that situation. Just come as soon as you find out, come, and it's fixed in the real time. It really is not that hard.
Wherever you are watching us from, we are connected with locations all around the world, from Dallas, Texas, in the United States of America, where we welcome for you Shawn Shrestha, who is the general manager of the insurance company, Shrestha Insurance Agency. We are going to watch this segment on how the United States of America is organized regarding taxes and aid, so that those coming to the United States understand the standards to follow.
For thousands of newcomers, the United States represents the land of opportunity. But from day one, a question arises. How do you align with Uncle Sam's tax and social standards? The first step is to define your status in the eyes of the IRS. If you hold a green card or pass the substantial presence test, you're a tax resident. Your duty? Declare all of your worldwide income and not just what is earned on American soil. Non-residents, such as students or certain temporary workers, use Form 1040-NR. They are only taxed on their income from American sources. A crucial distinction to avoid double taxation or costly mistakes. Regarding aid, the landscape has evolved. In 2026, access to federal benefits like food stamps, SNAP, or Medicaid depends strictly on your immigration status. Most qualified immigrants often have to wait 5 years before being eligible for certain federal programs. Be careful of the public charge rule. The administration evaluates if a newcomer risks becoming dependent on state financial aid. Using certain benefits can, in some cases, impact a future naturalization application. To navigate this labyrinth, resources exist. The VITA program offers free tax help to low-income earners and non-citizens. Additionally, many local associations in Dallas and across the USA guide families to obtain an ITIN number, essential for those who do not yet have a Social Security number. Being in good standing also means opening the doors to stability. A correct tax return is often proof of good moral character required during the final step. Obtaining American citizenship. Successful integration involves mastering your duties as much as your rights. Welcome to your new fiscal life, from Dallas for Wanjila Connect.
Wherever you're watching from, we're with you in the United States of America, here in Dallas, Texas, where we're talking about taxes and insurance with Shawn Shrestha here in his Dallas offices. How does Shawn Shrestha Insurance help its clients choose?
As I mentioned earlier, everyone has insurance and everyone has a different need. What you use insurance for is not the same thing as what I need insurance for. So depending on exactly what kind of coverage you have, things can be a bit different. In many situations, the insurance you get from the marketplace is actually an HMO plan. And insurance from a group of employees is a PPO plan. So if you need to be able to just go to any doctor or anything, then you usually will require a PPO plan. But if you just need something and you make a lower income, you're not making a whole lot of money, and you don't really care much about which network you go to, the marketplace will be good. If you folks come over here and give me your specific needs and tell me about the situation that you are currently in, we are always very honest and open about where you should actually be purchasing your insurance from. A lot of people come in here, want to buy an insurance, but it's so much better for them to do the group insurance. We do not sell them insurance from here, and it happens more than I can tell you, like how many times we've actually told them not to purchase insurance from here. We're always looking for a person to buy insurance for the right reason and in the right place. So if I believe that you would be better off with your work, I will make sure that you do that. So whenever you're bringing in and you want me to make a comparison, bring the summary of benefits from your work. We do this all the time. And then we'll put your work insurance and we'll put it against the insurance that you will be able to get from the marketplace. And we'll compare apples to apples, and you will know for a fact which one's going to be better for you, and we'll never sell you anything. Our job is to educate you. You will do the buying. So you will make the decision. You are the decision maker. So we're not going to force anything upon you, but we would be very unbiased about the situation and the insurance service that you have. And we'll explain. And at the end of the day, if you believe that the work insurance is good, then we'll suggest that you'll keep that. If not, then, you'll make a necessary decision, or whatever changes you may have to. Now, again, that the unknown is always the fear, like, what if I actually have to pay back a lot of money at the end of the year, with the work insurance? The premium is set, and whether you make $20,000 or $200,000, the subsidy, your premium doesn't change. However, the only risk from buying it from outside is that subsidy amount. Like, what if I make more? I had a client earlier, came in, and he thought that he was not going to have to pay much. But at the end of the year, he ended up making way more, twice as much as what he thought he was going to make. And then there are a couple of things that he needed help with as far as the business loan stuff. So he ended up having to declare all those income, and he ended up having to pay back $20,000 towards the premium tax credit. But he was like, but still cheaper for me because I went and had a surgery that cost me over $200,000. So if I hadn't had the insurance, which cost me $20,000 for the whole year, I had to pay the money back. But if I hadn't had that insurance, how could I have paid $200,000? That would have completely wiped me out. So again, situations, it's different. Reason why you buy insurance is different. So always make sure you sit down with an agent that understands the insurance very well, and will be honest to you and are very unbiased, and that they're not there just to make a sale. We're not here just to make a sale. We're here to help you understand what it is. And by doing that, so whether you have to repay back to the government, or, whether you go to certain doctors or not be able to go to certain doctors, whatever it is, bring your concerns. Bring, name of the medication you take, the doctors that you go to, the income. This is what I make, Shawn. Give me all that, and I can literally help you put together the plan that it's going to give you and serve you the best, you and your family both. The purpose of it is to help you get the insurance and not cost you too much. Because I don't want you to buy something saying that, oh, it's not cost me anything, and you turn around and having to pay $10,000 towards the medical bill. And then to save $100, you end up paying $10,000. So we got to make sure that you put all that in factor. Make sure to get the right plan. So make sure you sit down with one of our professional agents, talk, give us all the details. Let us know. Let us know everything. Don't hide things from us, because that way I can help you, and our agent over here can help you the best.
Wherever you're watching us from, we're with you in the United States of America, here in Dallas, Texas, where we're talking about taxes and insurance with Shawn Shrestha here in his Dallas offices. We're going to watch a segment on the Shrestha Company to understand how it works and its CEO here in the United States of America.
In a world where uncertainty is the only constant, finding a trusted partner to protect your assets is essential. Welcome to Shrestha Insurance Agency, a leading brokerage firm powered by the expertise of 360 specialty benefits. More than just an agency, Shrestha Insurance stands as a pillar for individuals, families, and businesses. Its mission is clear: to protect what matters most to you at every crucial stage of your life. The agency provides comprehensive expertise. Whether it's your health, life insurance, or protecting your assets through P&C insurance, fire, accidents, and miscellaneous risks, the solutions are tailored. For entrepreneurs, business insurance solutions ensure the continuity of their activities in the face of uncertainties. But the strength of Shrestha Insurance Agency lies in its global vision. Beyond insurance policies, the firm offers comprehensive financial services. Here, expertise isn't limited to risk coverage. It extends to managing your long-term financial peace of mind. The agency's other strategic component is its tax service. Navigating complex tax requirements can be a source of stress. Shrestha Insurance Agency brings clarity and confidence to its clients by assisting them with their tax obligations with exemplary rigor. What truly sets the agency apart is its commitment to personalized service. Here, we don't just manage files, we build long-term relationships. Every piece of advice is guided by deep market knowledge and constant support. Protect, advise, support. Shrestha Insurance Agency offers you peace of mind through 360-degree expertise. For your future, choose reliability. From Dallas for Wanjila Connect.
We're already heading into the final stretch of our discussion. We are talking with the general manager of Shrestha Insurance, who is hosting us in this office. How does Shrestha Insurance assist its clients in carefully choosing between the marketplace and employer-provided insurance?
As I mentioned earlier, everybody has an insurance and everybody has a different need. What you use in insurance is not the same thing as what I need in insurance for. So depending on what you have, So in a lot of cases, the insurance from Marketplace is an HMO plan. Okay. And the insurance from a group, my employers, are PPO plan. So if you're needing to be able to just go any doctors or anything, then you usually, will require a PPO plan. But if you just need something and you make less money, you don't have or you're not making a whole lot of money, and then you don't care much about which network you go to, the Marketplace will be good. So again, if you guys come over here and give me your needs and tell me the situation that you're in, we're very honest and then open to where you should be, purchasing your insurance from. A lot of people come in here and want to buy an insurance, but it's so much better for them to do the group insurance. We do not sell them insurance from here, and it happens more than I can, tell you, like how many times that we have actually told not to purchase an insurance from here. And we're always looking for, person to buy insurance for the right reason and the right place. So if I believe that you would be better off with your work, I will make sure that you do that. So whenever you're bringing in and you want me to make any comparison, bring the summary benefit from your work. We do this all the time. And then we'll put your work insurance and put against the insurance that you will be able to get it from the Marketplace. And we'll compare apple to apple. And you will know for a fact which one's going to be better for you. Now, we'll never sell you anything. Our job is to educate you. You will do the buying, so you will make the decision. You are the decision maker. So we're not going to force anything upon you, but we would be very unbiased about the situation and the insurance service that you have, and we'll explain it. And at the end of the day, if you believe that the work insurance is good, then we'll suggest that you keep that. If not, then, you'll make a necessary decision. A lot of it's changed. You may have to now, again, that the unknown is always the fear, like what if I have to pay back a lot of money at the end of the year? With the work insurance, the premium is set, and whether you make $20,000 or $200,000, the subsidy, your premium doesn't change. However, the only risk from buying it from outside is that subsidy amount. Like, what if I make more? I had a client earlier, came in and he said, and he thought that he was not going to have to pay much, but at the end of the year, he ended up making way more, twice as much as what he thought he was going to make. And then there are a couple of things that he needed help with as far as the business loan stuff. So he ended up having to declare all those income, and he ended up having to pay back $20,000 towards the premium tax credit. But he was like, but still cheaper for me because I went and had a surgery that cost over $200,000. So if I hadn't had the insurance, which it cost me $20,000 for the whole year, I had to pay the money back. But if I hadn't had that insurance, how could I have paid $200,000? That would have completely wiped me out. So again, situations, it's different. Reason why you buy insurance is different. So always make sure you sit down with an agent that understands the insurance very well and will be honest to you and are very unbiased, and that they're not there just to make a sale. We're not here just to make sale. We're here to help you understand what it is. And by doing that, so whether you have to repay back to the government or, whether you go to certain doctors or not, be able to go to certain doctors, whatever it is, bring your concerns, name of the medication you take, the doctors that you go to, the income. This is what I make, Shawn. Give me all that, and I can literally help you put together the plan that it's going to give you and serve you the best, you and your family both. The purpose of it is to help you get the insurance and not cost you too much. Because I don't want you to buy something saying that, oh, it's not cost me anything, and you turn around and having to pay $10,000 towards the medical bill. And then to save $100, you end up paying $10,000. So we got to make sure that we put all that in factor to make sure to get the right plan. So make sure you sit down with one of our professional agents, talk, give us all the details, let us know. Let us know everything. Don't hide anything from us, because that way I can help you and our agent over here can help you the best.
And if you could give us the address where Shrestha Insurance is located to wrap up our discussion.
The address is 3109 North Beltline Road, Suite 118. Let me make sure you got that. It's 3109 North Beltline Road, Suite 118. It's in Irving, IRVING, Texas 75062.
Yes? Shrestha, what are your final words to conclude this program? Your schedule is quite busy. We believe that we will have another opportunity to do our magazine segment again.
And so for my last comment, this is what I want to tell you. You do not buy insurance because you try to avoid the penalty. You do not buy insurance because you want to save money in a premium. You're doing it because of the unknown, what may happen in the future as far as the medical bills. And a lot of times, you may say, I'm young. I'm never going to go see a doctor. I'm not going to be sick. And I hope that's the right thing. And that's correct, but accident, they don't discriminate. With the age, it could happen to anybody from, brand new baby to a 100-year-old man or woman, So the purpose of the insurance is to transfer your financial risk. And that's why it is very important that we sit down and I give you the proper way and the right way. So it's very important you sit down and we see a lot of issue comes forth. I've seen a lot of issue, a lot of people that come in that's had, some, really sicknesses like cancers and, it's just, HIV. I've seen some customer that has some serious issues and I had to sit down. And the person who has a cancer, I'm not going to work the same, the person who's very, very healthy, because, those things comes into consideration. What you had, now nobody knows the future. So that's why I say, sit down with us. Let us know the concerns. Let us know the family history so that we can develop something for you. So whenever something does happen, you're not out just having to pay too much money out of the pocket. So even if that happens, trust me, people comes here with their medical bill all the time. Hey, can you help me? Again, if I have time and if there's something that we can do to help negotiate, we'll do that as well.
A big thank you, Shrestha. Thank you. Wherever you've been watching us, we've hosted Shawn Shrestha for you, the general manager of Shawn Shrestha Insurance, who welcomed us into his office. We talked about health insurance and tax returns. Wherever you've been watching us, stay tuned to our programs. Follow us on all our platforms, and we are in the United States of America, in the state of Texas, in Dallas. All your questions are welcome.